Welcome to Business with Louis, the show where we break down complex business concepts into actionable insights and inspiring stories. Today, we're diving into one of the most fundamental yet fascinating topics in the world of finance: how the stock market works. To start, let's define what the stock market is in straightforward terms. The stock market, also known as the equity market, is a platform where companies raise capital by issuing shares of stock to the public, and investors buy and sell those shares in hopes of earning a profit. It's essentially a marketplace where buyers and sellers meet to exchange ownership in companies. The concept of the stock market has been around for centuries, with its origins dating back to the 17th century in Amsterdam. Over time, it has evolved into a global network of exchanges, brokers, and investors, with the New York Stock Exchange and NASDAQ being two of the largest and most well-known exchanges. One key concept is supply and demand. The price of a stock is determined by the forces of supply and demand in the market. When there are more buyers than sellers, prices tend to rise, and when there are more sellers than buyers, prices tend to fall. Another important principle is risk and return. Investors expect to earn a higher return for taking on greater risk. This is why stocks are often considered a riskier investment than bonds, but also offer the potential for higher returns over the long term. Influential thinkers like Benjamin Graham and Warren Buffett have shaped our understanding of the stock market and investing. Graham's concept of value investing, which involves buying undervalued companies with strong fundamentals, has been particularly influential. Buffett's success as a value investor has inspired countless others to follow in his footsteps. Let's look at some real-world examples that demonstrate how the stock market works in action. Take the story of Amazon, for instance. When Amazon went public in 1997, its initial public offering raised $54 million, with shares priced at $18 each. Today, what? Amazon is one of the largest companies in the world, with a market capitalization of over $1 trillion. Investors who bought into Amazon's IPO and held on to their shares have seen returns of over 100,000%. On the other hand, consider the story of Enron, which filed for bankruptcy in 2001 after a major accounting scandal. Investors who bought into Enron stock saw their investments wiped out almost overnight. This example highlights the importance of doing your research and due diligence before investing in any company. If you're an aspiring entrepreneur looking to raise capital for your startup, understanding how the stock market works can help you make informed decisions about funding options, such as IPOs or venture capital investments. For individual investors, it's essential to have a long-term perspective and a well-diversified portfolio. This means spreading your investments across different asset classes, sectors, and geographies to minimize risk. It's also crucial to stay up to date with market trends and economic news, which can impact your investments and business decisions. Research findings from studies like the one conducted by Fama and French have shown that small-cap and value stocks have historically outperformed large-cap and growth stocks over the long term. Another study by Vanguard found that a diversified portfolio with a mix of domestic and international stocks, bonds, and other assets can provide more stable returns and lower risk than a portfolio invested solely in one asset class. In terms of specific strategies, investors can consider dollar-cost averaging, which involves investing a fixed amount of money at regular intervals, regardless of the market's performance. This approach can help reduce the impact of market volatility and timing risks. Additionally, investors can use dividend-paying stocks to generate regular income or growth stocks to potentially benefit from long-term capital appreciation. To further illustrate these concepts, let's consider some additional business concepts, such as compound interest and the power of reinvesting dividends. Compound interest is the concept of earning interest on both the principal amount and any accrued interest over time. This can help your investments grow exponentially over the long term. Reinvesting dividends, which involves using dividend payments to purchase more shares of stock, can also help you build wealth over time. In conclusion, understanding how the stock market works is essential for anyone looking to navigate the world of finance with confidence. By grasping key principles like supply and demand, risk and return, and diversification, you'll be better equipped to make informed investment decisions and achieve your financial goals. Remember, every great business starts with action. Whether you're investing in the stock market or building your own company from scratch, it's essential to stay focused, disciplined, and patient. With the right mindset and strategies, you can potentially achieve success and create a brighter future for yourself and your business. If you have any questions or topics you'd like to discuss, please don't hesitate to reach out. Like, share, and subscribe. And remember, every great business starts with action. Make your next move count.